what happened in 2024 with the election of Donald Trump is that the world is not going left or right, but America is turning inward for the first time.
Is US exceptionalism ending? Do you see the US market topping out?
Donald Trump and his MAGA crowd are going to learn a very hard lesson in economics. When economics meet reality, economics is going to win. It's just, it's like when the Titanic hit the iceberg won. The European markets are all at lifetime highs. So there's something going on in Europe. There's a very old saying in Germany, which goes as follows, that a lot of Germans don't believe in God, but every German believes in the Bundesbank.
Are we in for a chaotic period in the near term in markets?
I think as Aldous Huxley described in his famous book, A Brave New World. I think that's the reason I said that the world has shifted on its axis. So it requires us to have new hats, new thinking. I do not believe in particularly the wealth created through gold or through real estate or through any other asset class. Equities long-term always deliver a superior rate of return.
I do have to get your perspective a little bit on where we are now, because I think a lot of people, especially people who came into the market post-COVID, have patiently sat on the sidelines, watched this market do its thing for the last 5 months, right? And I mean, this month has been better. March has been, of course, better off. And you've seen so many cycles. So where are we in the cycle? Was that a post-COVID bull market that's ended and now is a new consolidation phase, or was that a correction in an ongoing bull market? Where are we, and what is this?
Yeah, the good news for me is that, in my opinion, again, these opinions can be wrong, but in my opinion, we're in an ongoing bull market. What happened was the first correction in 4 or 5 years. It was particularly severe, and market correction is always severe. It always kind of panics you and tests your conviction, tests your patience, which is all the things that it did. But they are short, sharp, and swift. As you saw, the index fell very sharply and very swiftly, almost without respite, 800,000 points a day after that. But my feeling is that that is just a correction in a bull market, not the topping of a bull market. The reason I say that is, even when the fall started, individual stocks were making new highs, new all-time highs. Bajaj Finance, United Phosphorus, Shree Cement, so many companies, good high-quality businesses were making new high. That would typically not happen in a bearish phase of the market. Secondly, more importantly, in the last 60 to 90 days, I put, I had the road, rubber meet the road, went and visited a lot of companies, just try to get feedback on what things are in corporate India out there. And almost universally where I went, people are talking about expansion, talking about growth, talking about margins, talking about profitability. So this was more of a market event than an economy event. There's very little leverage in the system. Banks are not leveraged. The stock market is not leveraged. So it was just a correction of valuation, which had probably become excessive, took place, and now we're resuming the bull market that began in 2021.
Well, that's really good to hear, because yeah, absolutely. I mean, we couldn't really pinpoint an economic crisis or a financial accident which triggered this. It kind of just happened on its own. On valuations, and that's why it's a little important to understand both valuations and the power of flows. Domestic investors were pretty much buying throughout, at least from the mutual fund side. They were pretty much buying throughout the fall, and yet the market fell because we were being hit by 8,000 crores, 10,000 crores of foreign selling on a daily basis, right? So it's probably too difficult to write that off entirely. And now they've stopped selling. In fact, now first trickle of buying has come through. So while we can't predict flows, perhaps we can't underestimate the relevance also, right? And what do you
You can't. I appreciate that. And a lot of my friends pay a lot of attention to the FI number, which I really don't.
Okay.
Because anytime there's a transaction on the stock exchange, there's a buyer and a seller. So if the foreigner is selling, someone is buying at the other end. Stocks don't go in a zero hole on the ground. I mean, there's always a buyer at the other end of the stock. So things are being bought. Someone who thought it was expensive was selling it or booking profits. Someone was thinking it's value and he can make money, so he was buying it. So, that takes it. Of course, it's important. I'm not denying the importance of the FI number out there, but I don't particularly pay too much attention to it. It's just one of the things we look at out there. What we particularly pay attention to is on the ground, what's happening. Is the company, how is the company dealing with the Trump tariff? How is the company dealing with inflation? How is the company dealing with the changing technology environment? I think those are more relevant questions for investors to ask in a bottom-up manner. And I think that's just noise that you can't control. If they're going to sell tomorrow, how do you control that? If oil spikes up, you can't control that. If Ukraine war ends or does not end, you can't control that. But you can control what you buy. And you want to buy those businesses that are, doing good, bulletproofing themselves, and which is what I've done, which is what's been very successful the last few years.
Fantastic. Take your point completely. There's always a buyer on the other side.
There always is. So, what does it matter?
The color of money doesn't matter. There's someone putting in the money.
Psychologically, it matters, but actually it doesn't matter.
Okay, fair point. Now to sort of press on that, the buyer on the other side, in this so-called correction phase, the buyer has largely been Indian, right? Domestic institutions coming in and pumping in money. Now, again, in your 40-year-old career, what do you make of this kind of domestic change, the ownership of the market changing? And this ties in with the valuation question as well. I mean, sometimes you would talk to fund managers and off the record or off air, they'd say, what do we do? I mean, we're getting 40,000 crores of equity inflows every month. I mean, how much cash level can I hold? I have to buy. So, not today, but could that sort of become a bit of an issue or a situation for the market?
I've been 40 years in the market and I've gone through my own phases out there. But I'm telling you, the more I visit, I've traveled a lot across this great country of ours, visiting companies, visiting people. This country is oozing opportunity. I mean, there's so many businesses that are going to be built which are world scale, brands that are going to build world scale. So there are a lot of businesses that you can start investing in even today. But the more important point I made to you earlier was that India is a young country. And if you're a young country, you should be happy when prices are going down. Because you're going to buy things cheaper. It's like your mother said when you go shopping, you pay cheese 8 mein khareedna. Agar apne 8 mein mile, it's better than buying it full price for them. So this correction gave you that opportunity to load up on the stock. And I am thrilled beyond belief that Indians didn't panic in this sell-off and they stayed true to the faith, they stayed true to the country and invested the money. And that's the correct attitude to take. That they are investing not for the next quarter, the next 3 months or the next 3 years, despite what's going on with Trump and company, but they're investing for the next 10, 20, 30 years of their lifetime. They're investing for their retirement, their kids' education, their parents' retirement, all those things they do. So I think it's been, the shakeout has been good. It has tested you. It has, proven that you have a conviction in what you buy. And there's no something called easy money on Dalal Street, as everyone thinks that I buy today, make tomorrow, which had gone on for a few years. But all the veterans have told you that, wait, when the correction comes, people will panic. But I think if they hold true to the flag and, I think it's great. I think the domestic money prospering or domestic India is great. We welcome foreign money, we welcome foreign capital, but they have a right to sell and I don't begrudge them that.
So absolutely, Ramesh. I mean, I completely agree with you. May this wave of domestic money, may it become a tsunami and may it continue for all our sakes. But my question was more sort of regarding valuations and whether so much of domestic money continuously coming in the market, whether that will sort of create its own valuation challenges. I mean, what's the range for India? Could be...
The market has a self-correcting mechanism, which we just saw. I mean, the index fell, 10, 12% from the peak. So it has a self-correcting mechanism built in. When valuations get too high or too stretched, someone on the other side will say sell. And it cannot be absorbed by the market, which is exactly what happened. So why worry about it? Market has a self-correcting mechanism. If you take stocks to unbelievable heights, the short seller will step in, or the promoters will sell in, or the insiders will sell in and want to encash it. So that will act as a natural check on the market, which it has done. As long as there's not any undue amount of leverage in the system. There was, I think, 70,000 crores of margin funding, which is the size of a small mid-cap company in India today. So there's no leverage. The banking system has no leverage. The government had fiscal restraints. So, in fact, money was tight. So there was no reason to believe that this would be a long-lasting bear market. And market will correct itself. Anytime the valuations of something become excessive, people step in and sell. Insiders sell, someone sells. And that creates a buying opportunity. So for the younger set, particularly, I want to focus on the younger set. You'll get an opportunity to buy stocks cheap, and you want to buy those high-quality businesses when they are cheaper rather than when they're more expensive. Don't assume or base your day on the fact that you made money in a particular stock in 2 days or not. If it went up today, I had a good stock. It went down today. That's the wrong way to look at it. Think of, as Warren Buffett taught us, that owning a piece of the business that I'm owning. Just like you won't sell your business if you owned it, or a real estate because the price fluctuated out there. Same thing, you're buying a piece of the business, the fluctuation is the market's randomness. that one day it offers something to you cheap, one day it offers you something expensive.
Yeah.
But you want to look for the fat ball outside the off stump you can hit for a 6. That's where you make money.